Hello everyone, let's talk about Netflix because they just released their earnings. It was really good. It was over all estimates in the market, including for subscribers. And that was a big chunk and a very important chunk that we wanted to see out of Netflix. So let's dive into that analysis. Some metrics that I want to discuss. So paid memberships and average revenue per membership. These were two key things that I wanted to see in this report. In terms of paid memberships, we had an increase of 8 million.05, which was extraordinary. It was really good. Out of that, 34% I think is the ad-supported tier, which was very good if Netflix would know how to monetize ads really good. It does not. So on that portion it falls really bad, but they are building their own platform. They will try it in Canada at the end of 2024 and start rolling it out in 2025 globally, which is very good because it will increase their revenue and their revenue retention in terms of, so transforming it into net profit going forward. So ad monetization, hopefully it will be improved. If we look at ARM, so average revenue per membership, we saw a decline in some areas. So Latin America, EMEA, and I think it was one more, I think in China, yeah, all were declining. If you look from an FX neutral perspective, it looks a bit better. We still have a decline in China, but we have an increase in Latin America and EMEA. But EMEA is not very important, it's like 1%, not much. Latin America is the one which is important, and to give you like a picture of that, we have plus 24% if we look from an FX neutral position. We have a decline of 3% if I'm not mistaken, something like that, if we don't look from an FX neutral perspective, because Argentina and other countries in Latin America have very big problems when it comes to their currency. It affects Netflix really bad. Revenue growth 17% to 9.6 billion, revenue growth 22% if you're looking from an FX neutral perspective. Operating margin 27%, up from 22%. EPS was $4.88, which was a beat of $0.40. So it's really nice. Operating cash flow, we have a decline there, and free cash flow is 1.2 billion, which is also a decline from past quarters. From a balance sheet perspective, 6.7 cash and short-term investments, debt 14 billion, which is okay. And the guidance was good in my opinion, 14 to 15% increase on revenue, and operating margin going a bit more up on 28%. From 22, if I'm not mistaken, 22, 23, something like that, which is really good. So from a guidance perspective, Netflix is doing good. But keep in mind one thing, Q3 was when the password crackdown started. So Q3 and Q4 will be a bit more difficult for Netflix to show strength. It was able to show until now, but it's important to keep in mind that it will be even more difficult going forward. Maybe not Q3 will be the most difficult quarter, but Q4 I think it will. But it was still impressive that in Q2, when usually Q2 in terms of streaming is a very bad quarter, they were able to show such great results. Other than that, again, the ad tier, so the ad plan accounts for like 45%, sorry, not 44, 45% of signups. So out of the 8 million, 45% were ad supported. It would be great if Netflix would have a very proper ad monetization strategy. They don't have, so it's still lagging there, but they will with the new ad platform, I hope at least. But that again will come, I would say, broadly more in 2025, I think second half of the year. Until then it will be like rollout, and it all depends on how they tweak it to be a very good monetization platform. We will see from there. In terms of series and movies they have, so there it's like a double-edged sword here. They had good content, which is like their original content, but they also had bad content. And in my opinion, because they don't have very big IP, very important and well-known IP in terms of movies and everything, and in IP in general, it's still a pain point of Netflix. So even though they are creating their own IP, I would never compare, how should I say it, and how should I make like a comparison. I would never compare. Let's take Squid Game. I would never compare Squid Game with something like the Game of Thrones universe, which is a lot bigger. I would never compare it to Lord of the Rings, to Disney's IP. So it's still very, very weak IP in terms of global monetization, not just from a TV series perspective. If you want to go into like movies and everything, you don't have an entire universe from which you can milk. So when I'm thinking of Disney, of Warner Media's IP, Sony's IP, and other IPs that there are out there, they are way more important. You can monetize them with movies, with TV series, with merchandise, with a lot of things. Netflix cannot do that, and what they've tried, and it was a smart move, was to create games around them. And another important thing that I've seen from their earnings report, they want to create, and they will launch a multiplayer game of Squid Game. If they do that right, I'm not sure how they will implement it and let's say use this multiplayer idea. If they do this right, it can be a very profitable endeavor. So I'm thinking of microtransactions at a certain point. I don't know. I know no one likes microtransactions, but who knows? Or they need something to keep people engaged. So if they implement this right, it can be a very, very big game changer in terms of games. Because if you look at December 2023, when they added the GTA collection, the old GTA games, it was a huge jump in gaming for Netflix. It was just for 1 month, which is kind of the troublesome idea, because you kind of want a sustained, let's say, growth and interest in your games. But still. So they said that they'll launch 1 game per month. They kind of focused on the TV series, making games from the TV series that I think are very, very bad. I know they were very well received, but at least from my perspective, which is a very subjective perspective, they were bad. We'll see how they continue going forward. But gaming is a very good, and it has very big potential as long as they kind of translated and implemented really well. Until now, I think just the GTA moves were good. Otherwise, not so much. I think, for example, if I would compare with something, still Apple with Apple Arcade is 10 times better than Netflix with their gaming. That's just my 2 cents. Going further in terms of, let's say, price, I think Netflix is a bit overvalued. So I did an analysis and a modeling of how Netflix would look, and I'll share it with you. So if we go on a 14.5% increase, exactly what they said, 14 to 15% increase this year, and 12, 10, 10 afterwards, with an exit multiple of 35, we just get to 463 price. So right now we are 28% on the upside, which is really bad. I would say an exit multiple of 35 for Netflix is a bit big, because it doesn't really have that much pricing power, and it does not have that competitive. Okay, it has competitive advantage, but again, it's not the leader. So if I'm making, let's say, a parallel with Nvidia, I can give an Nvidia 40% or 40 exit multiple because it's the leader. It has a huge chunk of the market. Yet again, if you're looking at Netflix, it has what was it exactly? Their share of the market? Oh, we have it here. It's 8.4%, and still we have YouTube, which is way bigger. And don't forget, YouTube grew from 8.8% to 9.9%. So it had a bigger increase, a way bigger increase than Netflix had. So from that perspective, I still feel that Netflix is not. I would not use such a higher multiple. I was very generous when I said 35 as an exit multiple, but we'll see. And also, I think the revenue growth in this perspective is very generous as well, and also the EBIT margin. Even though if I up the EBIT margin like a bit, this would also mean I should adjust the exit multiple, but let's just leave it as it is. We still get to like 515, which is still almost 20% off of the price we have right now. So investing in Netflix right now, I think it's risky. It's a very good company, but not at this price. Under 500, it has to be under 500. Ideally closer to 400 to be in a, let's say, a very to be in a safer area if you want to invest in this company. For someone who's a long-term investor, Netflix is a very good company to add in your portfolio, but I would wait for a correction because corrections always come. Or if I would allocate some of my money to Netflix right now, I wouldn't allocate such a huge chunk. I would start very small, and whenever I catch a very good price, a big correction, I would go into Netflix. Right now, after the earnings release, when they had very good earnings, not a good idea. Maybe after Q2 or Q4, when they will probably have not such a good, let's say, quarter comparison earnings, that would be a better idea. We'll see. So I'm not saying don't invest in Netflix, I'm not saying invest in Netflix, but this is kind of my idea when it comes to Netflix. A very good company, still has a lot to go, still needs to improve ad monetization, still needs to improve on the gaming, and still needs to find something and do something with the IP that they don't have, because their original IP is still not strong enough in my opinion. And yeah, it's a bit overpriced right now. So that's kind of the gist of it. If you like the video, please like and share because it's free for you and it helps the channel tremendously, and also subscribe. Please also leave your thoughts, your comments down below because I'm really curious of what you think. Do you think Netflix is stronger than I assessed it, or do you think it's a fair assessment, or maybe I would even exaggerate it a bit and it should be even lower than what I mentioned? That's kind of all. We'll see each other next time. Bye bye.